As advice-only financial planners, we have the privilege of working with a diverse range of clients in all phases of life and situations, from just starting out to people already well in retirement. We see the benefits of healthy habits of saving and investing, but we also encounter plenty of mistakes that our clients want us to help them sort out. I'm Lori, an advice-only financial planner with Abundo Wealth, and these are the 5 most common and impactful financial mistakes we see and want you to avoid. Number 1, paying too much for life insurance. We see it all the time. It usually starts with an old friend or a friend of a friend who's now a financial advisor at a life insurance company reaching out to grab some coffee. And it ends with being the new owner of a costly whole life, universal, or variable life insurance policy. These products are usually sold as combinations of investment growth and life insurance protection with amazing tax advantages. But as an unbiased third party, we see something else. Large sales commissions, high fees and surrender charges, poor investment returns, and expensive insurance with a death benefit often too small to protect a family. Permanent insurance products can cost well over 5 times more than basic term life insurance and are sold to tons of people who simply don't need or can afford the policies. Having the right coverage can make a huge difference in your ability to save for retirement while still protecting your family with term life insurance. And as the saying goes, buy term and invest the difference. Number 2, not investing cash in side accounts. When you add money to an investment account, that includes your IRA, Roth IRAs, health savings accounts, even regular old individual brokerage accounts, it's easy to accidentally let the money sit in cash without being invested. It might not seem like a big deal, but over time, the cash is missing out on growing with the market. For example, money invested in a total U.S. stock market index fund would have roughly tripled in the last 10 years. That's a big deal. Once money is deposited in your account, where it typically lands, into a cash holding fund, the next step is to buy mutual funds or ETFs so your money grows to meet your long-term goals. Number 3, keeping cash in low-interest savings accounts. We recommend keeping a cash reserve of a few months of expenses so you have liquidity in an emergency or for short-term goals. But for the longest time, cash wasn't earning any interest anywhere. Then as rates rose, this changed. Now you can find plenty of high-yield savings accounts and FDIC insured paying over 4% in interest. Yet a common mistake we see is cash still earning next to nothing in big bank savings accounts. So for every $10,000, you're missing out on over $400 of interest a year. Put that cash to work in a safe place to make sure your money is earning you money. Number 4, overpaying for mutual funds. A lot of funds out there have high embedded costs called expense ratios, and these fees can take a huge chunk out of your expected returns over time. That's why we're big index fans at Abundo. They passively follow market indexes and have lower expenses than actively managed funds. In fact, passive index funds with their lower fees end up beating actively managed funds 9 out of 10 times. If you have high fee funds in your portfolio, consider reallocating them to lower cost index funds, which is easy to do in a retirement account like a 401k or IRA, but for a taxable non-retirement account, there could be tax impacts. So consider talking to a financial planner or tax professional for a tax-efficient plan. Number 5, not knowing where your money is going. The biggest key to building wealth is as simple as spending less than you earn. But by far the most common mistake we see are clients not having the full picture of their cash flow. This starts with first understanding your income, tracking your expenses, knowing how much you have left over each month to save, and then applying those savings towards your goals. For some people, this is second nature. For others, they must work a little harder and take it one day at a time. While we don't expect everyone to love budgets and spreadsheets, it's all about finding a system that works best for you. Because being aware of how much it costs to run your life builds healthy habits towards meeting your financial goals and living the life you want. That doesn't cover every financial misstep we see, but those certainly are some of the most common and impactful. Sometimes as financial planners, it's not just about helping our clients make the right decisions, it's also helping them avoid costly mistakes. Abundo Wealth is an advice-only financial planning firm on a mission to make low-cost investment and financial advice accessible to everyone. And if you like getting regular tips on practical financial topics, don't forget to like and subscribe. See you next time.